takes a minute for Zoom and YouTube to convert with each other. Got an interesting show for everybody today. There we go. And where we stop, nobody knows. There we go. A little bit of that, a little bit of this. A little bit of that. And we are now live. Okay, perfect. Let me switch this over here. We are good to go. Let me just share my screen, make it a little more official. You guys don't need to be watching me for the next 30 minutes. All right. Good morning, good morning, good morning, everybody. Hope everybody is doing very, very well on this wonderful Tuesday. And don't forget today, check out Top Stock for March. Here is a link for you guys. Good morning, everybody. Good morning. Timothy, Robert, Infinitely, Victor, Assam, Dave, Andre, Jim, Ivano, Ben, Douglas. Good morning. Good morning. I just posted a link. Remember, VIP room is at noon, and there's a great webinar going on right now about the trading pit. Don't miss out. Top of the morning to you too, Scott. We'll be starting in just about a minute. Can't believe it's Wednesday already. Where is this week going? You guys should be able to see my screen, okay? The big question everybody has right now is where's the market going? And here I'm gonna post. I don't know why I can't speak this early in the morning. Roger at rogerscott.com in case anybody wants to reach out to me. Now, yesterday when we were here, I talked about market momentum and I talked about market breadth, and I talked about, I don't know if you guys were here yesterday or not, but I talked yesterday. Hey, Cam, good morning. Hey, thanks for bringing it up, actually, inadvertently. Folks, remember, I know I got a lot of emails, and I posted my email address, but if you have a customer service request, not a very specific, if you have an issue about a trade that I issued or about something to do with trading very specifically, please reach out to me. But if you have a question about how to install something, how to select the best options, if you have a broad or general question, please feel free to reach out to Cam. I confused them. They're brothers. I'm allowed to do that. He started a group, an initiative called Customer Service Live, and it's from 10 a.m. to 1 p.m. All you've got to do is go into your customer service members area, press the big red button, and you're good to go. So please, please, please take advantage of it and get your question answered. And Cam, if I confuse you with your brothers sometimes, you guys both work for the company and I interact with both of you, I apologize. I am so sorry about that. Good morning. Good morning. And they look alike too. So that doesn't help either. All right. Let's talk a little bit about the market. Now, if you guys, let me back up a little bit and go back to yesterday. Scott, if you have a question about coin, just send me an email, please. I'm not going to answer specific questions here, but that was a trade I gave yesterday that worked out really well about 20 minutes into the market closed, when coin went up to about the 40s, the low 40s, high 30s. Okay, so yesterday, while we were here, I showed you how momentum levels, I'm going to go back to the time back machine. And here's the time back machine. Let me go back to yesterday. Let me go back to Friday. So I showed you yesterday and Monday how there was 471 stocks. There you go, Cam. That's the spirit. I showed you how there was 471 stocks making a 90-day high on Monday. And I warned you that this happened on Friday, but it's a time back machine. So it takes us, we were able to see this on Monday. And then if I go to this, if I click this, this is Tuesday morning. So on Monday, I told you guys that there was 471 stocks making a 90-day high according to my scan, and there was only 10 stocks. This was Monday morning when we came here. And if you guys don't remember this or don't believe me, just go to the live tab and please watch the video that I showed you on Monday. And I wrote out, good morning, Dr. Serena. And I wrote up that we have 471 stocks making 90-day highs. Typically, when you see this number of stocks making 90-day highs, the markets are ready to cool off a little bit. Well, guess what happened after this? Keep your eye on this 471 number. This is Monday morning when we first came in here. This was yesterday morning. Let me go to yesterday morning. We had 337. And this morning, you know how many we have? 151. So we went, in 2 days, we went from 471 stocks making a 90-day high to 151 stocks making a 90-day high. And what about lows? Well, the number it doubled. It went from 10 to 20. Not bad. Not bad. Hey, Alexander, I'll talk about levels in just a few minutes. Hope you're doing well. Haven't heard from you in a while. Hope you're still enjoying the pit. So the question now is, the trillion-dollar question on everybody's mind is, what's going to happen? Is the market going to cool off, Roger? Was it overbought? So one of the biggest factors is how many stocks is making a 90-day high, 90-day low, right? We talked about it. The number's not high right now, and not high at all. And if you guys are saying, what? You never talked about any of this. I dare you to go to my video from yesterday or Monday, and you will see a long discussion about how the number of stocks is now getting too high and we need to cool off. I dare anybody to tell me that we did not have this conversation in the morning in the last 2 days. Another factor that determines how low we go is how fragmented the market is. No, you're not going to hear this from CNBC. I promise you. Now, I've been bitching and moaning about that the market's been really defragmented. And I explained how markets get defragmented they get fragmented on the way up. When they're overbought, they get really out of whack. And when they come back down, they compress and they go into status. Now, this is yesterday when I showed you this, I said, this is the best example I can give you of a totally screwed up market. Thank you, Adam. I appreciate that. I said, this is as screwed up market as you can get. Like I explained yesterday, I showed you yesterday, I said, look at semiconductors, look at technology stocks, look at Russell 2000, look at consumer discretionary. For example, communication and consumer discretionary, they're next to each other. That's great. Well, technology should be right there next to them. And you know what should be next to technology? Semiconductor. And next to semiconductor should be Russell 2000. I just gave you a list of all the speculative stocks. This is yesterday. So before the market opened. Now let's talk about this morning. Okay. This is today. Consumer discretionary is down here. Communication services down here. Hey, QQQ is closer. They're closer. And look at tech. Tech is not up here anymore, is it? It's all the way down here. Am I seeing what I think I'm seeing? Consumer discretionary, communication, QQQ, technology, Russell 2000. Are they starting to get close to each other, or am I imagining things? Are you guys following? And by the way, now chips are still here. You're not going to get, we have that AI BS going on right now. But look at everything else. What about blue chips? Are blue chips in line with each other? Oh, look at this. Basic materials, energies, utilities, industrial, financial, consumer staples. Yes, they're. So as you go up, you get whacked out. You get exactly, Adam. That bag is starting to. And I dare anybody to say I haven't been talking about this big time in the last 2 days in the morning with you guys. Now, do you guys understand why this is really important to watch? I'm literally giving you the code map for the day ahead. So now, are they completely perfectly in line right now? No, they're not. So what would have to be for them to be in line? Well, let me give you an idea. The mid caps would be near the Russell 2000, a little more towards the Russell 2000 because they're also a little more speculative. But that's not a big thing. The big thing is I want the Dow sectors to be next to each other, the blue chip sectors to be next to each other, and I want the tech sectors to be next to each other. So, for example, I want to see consumer discretionary, communication, QQQ, and technology. I want to see them next to each other. I want to see industrial, financial, utilities, energy, basic materials, real estate, and consumer staples right next to each other. Not bad. We're getting there. Look at it yesterday. This is yesterday This is the day before yesterday, before the opening bell. This is yesterday before the opening bell. Look. QQQ's up here. Consumer discretionary's down here. Uh, Technology's up here. Not that whacked out. It's getting better already. It's not perfect yet, but it's getting better. It's definitely getting better. It's moving in the right direction. So the next question is, well, what's next, Roger? What's the market going to do right now? We'll talk about that. First of all, the bond market rallied yesterday. The bond market did not go down. When the bond market rallies, it means that there's remember, bonds go up, interest rates go down. This rally yesterday is telling us that the Fed is going to push the can back. That's not that bad for the market. That's okay for the market. It's not. Remember, you're getting your bike. You're just not getting it tomorrow. You're getting it this year, but you're getting your bike, but it ain't happening tomorrow. So this is not really bad news for the market. Matter of fact, this takes some pressure off of the market. Okay. This takes some pressure off of the market. So, and again, we're now back in this range, and I'm not seeing bonds go much higher from here because we are in this range. And let me show you this range. There's that range I was talking about. See that? So if we now start going down back into this range, it'll be and today is a very important day because today we have Jolts, ADP, Jerome Powell speaking. So today's a really important day, especially with ADP numbers coming out. So, and this could be one of those situations where good news is bad news is good. You guys know all that stuff. So watch the bond market. The bond market didn't do anything bad to cause this yesterday. Okay. Number one. Well, let's look at volatility. What's happening with volatility? Well, it huffed, it puffed. And what happened at about 320 yesterday when it peaked? Let's look at the market yesterday at 320. Let's look at the SPY. At 320, the market bottomed out yesterday. And what happened the last 30, 40 minutes of the day? It started going up. It started rallying. And what happened into the extended session? This is morning, guys. This is this morning. This is last night right here. Goes up, has a little downside. And what happens this morning? It's coming back up again. And what's happening with volatility? Is volatility increasing this morning or is it decreasing this morning? It's down almost 3%. Volatility right now, volatility on a 5-day basis, volatility has already erased half of the downside. Hey, Pro Trader Challenger. I like that. That's a good name. So volatility is going down right now. Volatility is not going up. And earnings are almost behind us. So the only other major caveat would be Jolts, ADP, and I don't think Jerome Powell speaking is going to have much of an impact. If anything, it'll put the market back. It'll put the market a little. It'll give the market a little better expectations. So, do I believe the market? Do I believe this is it? That the market's gonna that we're gonna implode? No, I don't. I think this is what we really really needed, and something I've been talking about for a while now. A good little pullback. Momentum levels yesterday. This is put to call ratio. The put to call ratio is right now at the highest level we've seen. It's over 1, which means put buyers are coming in. Usually when put buyers start coming in over 1, we have a reversal. So I didn't see a big whack out here on the put to call ratio. I'm not seeing volatility spiking again. I'm not seeing the bond market really doing anything. If anything, the bond market's going up, which is telling us interest rates are going to stay lower. Are going to stay are actually going lower faster than we expected because the economy's heating up. So I'm not really seeing any major reason for the stock market to crap out yesterday, except maybe just a little bit of selling pressure in the indices, which we desperately needed. Now let's talk a little bit about the SPY. If you look at the SPY, let's go on a month basis. This is 1 month. We simply went back into this area right here where we've been consolidating for a few days. We haven't broken this level yesterday. Now, we reached this level. We were at this level right here several days. And I wrote yesterday in the trading pit, I actually wrote you yesterday a note right here, drawing this line and saying, as long as we don't go into here, and I drew this, we should be okay. I sent this to you yesterday, 3:35 in the afternoon. Hopefully by now everybody's in my Telegram channel. That's the only way I advertise this room. So I imagine most people here are from the Telegram channel. Also, notice yesterday how the wick went down and then went higher. So the fact that we have a good support area here, the fact that we bounced hard from it, on reasonably good volume, actually, when we came down here, we bounced really hard. I would say this area is going to hold. I would be very, very careful. And the area that I would be watching would be this area right here, the 504 area. We're right now at 509.36. Okay. We've already erased half of the downside from yesterday, pre-open. Look, up 0.43, down 1% yesterday. So we've already erased almost half. We've erased actually 43% to be specific with you. So based on where I'm seeing right now, to me, this just looks like a very minor pullback, if you even want to call it that we desperately needed, especially after making all-time highs. And am I anticipating a real down day today? No, I'm not. Now, caveat. I have no idea what the ADP report's going to be. And more importantly, this ADP report has been completely off this Friday's report. Remember, this report is supposed to tell us what this Friday's report is going to do. Okay. So, but it is market moving, and that's coming out in about 11 minutes. Then we have the JOLTS report, the job openings report at 10 a.m. That's going to be very instrumental. And then you've got Powell speaking. Then you've got petroleum status report and then beige book. So you're going to have a lot of volatility today. Hey, Roddy, good morning. Good morning. I was reading your testimonials yesterday in the trading pit thing. Extra cheese on the Big Mac. I love it. Love it. Love it. Love it. Can't get enough of it. And then tomorrow we got international trades and goods and services. So yes, I am expecting volatility, but based on what I'm seeing right now, especially with the VIX, with the put to call ratio, with the bond market, with the S&P intraday, I'm just not getting a gauge that the market is ready to cool off that much. But I am very, very excited that we don't have 490 stocks making 90-day highs anymore, and 10 stocks making 90-day lows. Because you can imagine how difficult it is for me. See, look, 21 to 151. This is much more manageable than this, than that, and this. Here's how we came into Monday morning here. 2 days, 48 hours ago, this is how we looked. 471 to 10. And now, we don't look like that no more. Now we're 21 to 151. Much more reasonable, much more palatable. The market is, imagine when you have a ball and the ball just keeps gravitating up, and it never wants to go down. And you got to pull it down. Now things are a lot more balanced. Remember how I've been saying, for folks who are diehard Roger Scott fans, I've been using the word rhythm. And I've been saying how the market is losing its rhythm the last several days. Does anybody remember me using that word, specifically using that word? And that's what happens when you get fragmented sectors, when you have too much upside and no downside. Things start going like this. The market loses its natural rhythm. It needs to have that rhythm where the buyers and sellers are both taking action. When the market gets like this, you're only seeing one side take action. So when I say the market has been losing rhythm, it's been becoming very static, it's becoming harder to trade. All of these things are happening because the buyers don't have anything to sell to. And that's why the markets have been just moving like this. So the fact that sellers came in and the fact that the market has a much more balanced approach really helps. Notice you're not going to hear CNBC talk about rhythm, market rhythm. All right. So these are very, I'm going to teach you guys over time what rhythm and acceptance is. Okay. These are complex. These are not basic concepts, and it'll take me a while to explain it to you. Yes. Ebb and flow, Ben. Rhythm. Moondog is in the house. Yay. All right. So the markets have been very listless, running out of rhythm, very kind of almost like they're trading after hours. You guys know what I'm talking about. We've seen a lot of that. Good, 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 MJ. Good, good. So when this happens, when we get a breakdown like this and the market gets back and becomes more balanced, if you will, it starts gaining a lot more rhythm. Options become more liquid. Market makers don't spread the options because they have no idea which way the market's going to go. Things seem to move. There you go. Moondog's got rhythm. How old are you, Moondog? Tell us how old you are. But he's got rhythm. He's got rhythm. All right. I love it. I love it. I love it. So the reason I'm saying is people say I have rhythm, and then you realize that I love when people are passionate, when they're especially when they're older. And I know Moondog's not a young man; he's old, more like my age or older. 73. There you go. But he's got rhythm. That's what we want. Thank you, Moondog. And look, you're here early to check this show out. Exactly, exactly, Cam. Who can ask for anything more? That's exactly right. So, all right. So you guys now have a very deep understanding of where I stand this morning in terms of um, the big no, not the little picture, actually the micro view. I kind of started with the micro view because I know that a lot of folks were very interested in what's going to happen right now. Where's the market happening right now? What should I do? And also look at the number of 20-day highs, stocks making 20-day highs. We have 34 stocks. Look at it on Monday, 155. And now 34. Makes it much easier for me to see which stocks are really moving and which ones are not. Hey, um, work to wonder here. Good, 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 good. Carrie's here. Good morning, good morning, good morning. All right, let's continue. So you guys have the volatility view. You have to put the call ratio view. You understand that the market is not as bad as it is. Let's talk about global economy, and then I'll get into individual stocks and sectors. We're waiting for Jerome Powell to speak. We're looking for the second tier jobs data. The first tier is coming out on Friday. Porter, there you go. We're now Nasdaq is at a 1.5 week low, not a 1 year low, just a 1.5 week low. No one died. It's all good. We needed this. This is good. Apple went down because of China. China actually, believe it or not, I gave you guys 3 reasons why the market dropped yesterday on the Telegram channel, and they were all related to China. All right. So Apple fell 2%. Counterpoint indicated the iPhone sales in China dropped by 24%. I don't use the iPhone. I use a Samsung, but everybody else in my family uses the iPhone. I'm not a fan. Now, this is important. Factory orders fell, biggest decline in 3 and 3/4 years. That should cause a pause, folks, for industrial and basic materials and factory orders. A factory order, remember, everything we have is made with basic materials. If factory orders are down, then basic materials would be down too. So keep an eye on basic materials and some blue chip stocks. This is not a good number. This is not a good number. This is a very, very bad number. I know the Wall Street didn't make a big deal out of it yesterday, but I think it's a big deal. Factory orders are at a 3 and 3/4 year low. That's close to COVID, if I remember correctly. We now have a 21% chance that they're going to raise lower rates in May. You guys know how I feel about it. I think uh, we've moved. I think Kashkari yesterday said third quarter yesterday for the first time. We're going to be listening to Jerome speak today about, I want to see if he uses the language of third quarter, second quarter, 2024, maybe pushing it back to the end of 2024. As long as the rhetoric is, you're getting the bike this year, we're going to be okay. But if he starts talking, things are not looking as good. If he starts changing his tune, that's not good. I don't think he's going to do that. I think he's not that stupid. He's not going to change his tune. He's just going to say we have more things to dissect and investigate. He's going to be broad and very general. Um, he's not going to be specific. We've got the ADP report coming out soon. We've got job openings report. This will be really important. The job openings report are going to tell us whether economy is more inflationary or deflationary. If employers have control, it's deflationary. If the number is higher and employees have control, that's inflationary. It's very hard to remember all this. If you do it the way I'm telling you right now, it makes it easier. Who has control, employers or employees? If the job market's getting tighter, employers have control. If the job market's getting looser, employees have control. If employers have control, that's deflationary. If employees have control, that's inflationary because they could say, "Hey, I'm not going to work unless you pay me X." You understand? I'm trying to make semi-complex economic. I'm trying to make it simple for you guys to understand. So ask yourself, who's in control? Employer or employee? Employer, deflationary. Employee, inflationary. Okay. That's how I explained it to my 10-year-old. No joke. That's how I explained it to Rachel. Europe is up a little bit. They're digesting key retail data. They're not happy about our factory orders. This is not good. This is a bad number, a bad number. But they're doing okay in Europe. They're waiting for today pretty much. China closed slightly lower. Absence of big stimulus measures from Beijing left some investors disappointed. Folks, China has a big reason why the market fell through yesterday, okay? Let me show you what I mean. Look, I highlighted. Look, can you guys figure out why stocks went down today? iPhone sales down in China. Tesla downgraded, China. AMD, China. 3 reasons why the market went down yesterday, and they all were related to there you go, Angie, you got it. Got rhythm. There you go. So we got to be really careful with China right now because China is putting us in a pickle. Keep your eye out on gambling stocks, which actually went up yesterday, ironically, with China going down. Nikkei closed just below flatline. Losses in tech stocks are leading the market low. They're following U.S. CrowdStrike and networking stocks should get a boost today. CrowdStrike went up 24% after hours. I think that's fantastic. Nordstrom's did not do well. Notice, you guys might have noticed a pattern of cheap retailers like Ross Store, TJ Maxx, cheaper stores doing really well, where expensive stores have been not doing so well. That's telling us that the economy is not picking up nearly as well as we have expected it to. And NVIDIA is getting a boost today. They got an upgrade. So chip stocks and network stocks, tech should get a nice little reversal from yesterday, okay? All right. So levels. Let's talk levels right now. This is the 5-day S&P. We're moving higher. I think if we can break above 511. If we can break above 511, we can go back up. We've already overnight erased half of the losses. So all we need to do is break above 511 and we're good to go. Okay. Now, if we break below 506, it's not going to be good. So the two numbers you want to remember are 511 and 506. Let's look at ADP real quick. Ooh, 140. Well, we were in the middle. They were expecting 150 and they got 140. Let's look at the bond market. So far, nothing. We'll see how what's moving in a minute. Sometimes it takes a minute to start going. Let's look at futures. Futures aren't looking all that bad. Why did Joanne, you're asking a question you're asking a two-sided question that doesn't have any relationship to each other. You're trying to find a relationship between defensive stocks and CrowdStrike earnings, and there isn't one. So I'd love to answer your question, but you're okay. So defensive stocks and CrowdStrike earnings have nothing to do with each other. Okay, so I just want to make sure we're on the same page. I think stocks went down yesterday because the market has been grossly overbought. We needed to cool off, and we had some negative data on tech, which caused institutional traders to trigger a sell-off in tech stocks that bled into the broad market. CrowdStrike earnings had nothing to do with that. So it's very important, Joanne, where when you have a formulate an idea that you make sure that idea is related because it can confuse you otherwise. You're asking a good question, but there's don't make a connection when there isn't one. That's what I'm trying to say. Yeah. So there you go, Moondog. I like that. Look what Moondog wrote. Dow Jones went down with a 404. Does that mean couldn't find page on the net? That's right. It's a cybersecurity stock. Yeah, they're just there's not that much relationship between their earnings and what happened yesterday. And by the way, Campbell Soup came in line with estimates, which is good. So the market is not interpreting the current report as negative. If we look at the SPY, well, let's look at the QQQ right now, real quick. It's great being here when the reports are coming out because we can be here at the same time and we can kind of look at it. Let's see how the QQQ is reacting. Yeah, it's moving. It's not really moving down or anything. It's just kind of sitting here. And remember, we have today also we have Jolts at 10 a.m. and Mr. Powell speaking. Also, the report is not as meaningful when it's not that off. When they're expecting 140 and we get 150 and it's a private report, it's not that bad. Let's look at TLT. Yeah, dropping. Yeah, that's not unexpected. Remember, I said it's going to go here and then it's going to come right back down. It's going to be in range. Not unexpected. Not unexpected. Okay. So now let's take a look at levels. I gave you levels on the S&P. Let me give you levels on the QQQ, and then we'll get into the top stocks, okay? Look at QQQ go. So the key level here is on the QQQ, 442 to the upside and 436 to the downside. Not a big reaction. Not a big reaction at all. Okay, so markets are stable. The report was not bad. This number was not 300,000 when they were expecting. They got 140 versus 150. That's not bad. That's not bad at all. Yeah, and I think it's going to cause the market that's not going to cause any trouble for the market. It's just not big enough to be a big like if it was 200 or if it was 90 maybe, but 150, 140, it's not bad. It's not bad. Employment is okay. It's not loose. All right, let's talk about individual stocks now. It's obviously going to be easier to find right now. It's going to be a lot easier to find stocks that are moving versus what it was last couple of days because we don't have 150 stocks making highs. And by the way, don't look now, but we just hit an all-time high in our viewerships here with 275 people watching, which is very cool. Yeah, Dr. Serena. Remember what my goal is. I want to get up to 1,000, and we will. All right, let's continue. So I'll start with the bear side, okay? Let me change my template, and I'll start with the bear side. Okay. Let's do this. JD, Chinese stock. Chinese stock rallying yesterday. Look at this downtrend. Would I be buying the stock? No. Would I be selling the stock? Yes, I would be. Starbucks, consumer stock. I'm glad you're enjoying it, Frank. Thank you. Starbucks. PayPal going down, Starbucks going down, Tesla going down, Apple going down, Google going down. I think I've said enough. What a beauty. What a beauty. UNH. Yeah, and Cam does remember 10 to 1 p.m. Cam's got your back, guys. UNH. Baidu. Remember when we shorted this stock? Oh, it was Roku. I confuse Roku and Baidu all the time. But we shorted this one too. Hey, I've been all over this stock now for weeks, actually for months. And guess what it did yesterday? It made a new low. GXO. Let's see what it does during the day, Moondog. Ooh, what a beautiful stock. So markets open higher, these stocks going down. What do? You fade them. Med. Oh, this I circled this one. Probably shouldn't even be telling you that, but I circled this one for myself this morning. That's one of my that's my circled list right there. I give you guys too much. Honestly, I give you guys too much. Oh, what a beauty. I really like my shorts today. Choppiness penny, choppiness and maybe some downside, depending on what happens next few days. Moondoc says dyslectic? Not sure. Invista, NVST. And last one, this is a cybersecurity stock too, by the way, and it ain't doing as well as CrowdStrike. VeriSign is what, those little locks that you see on your browsers? That's VeriSign. They're cybersecurity for, so yeah. So that's the downside. Those are the stocks that I'm bearish on today. Let me give you the stocks that I'm bullish on today. I don't know why, but my mom and dad love going to this store. I have no idea. I've never been there in my life, but they go there on weekends all the time. I don't know why, but they do. And we live in Florida. I don't know what they need a code for. HCA Holdings, second one. THC, Eurokubutu, right? Moondog, right? THC. Look at that beauty. Man, I am giving you guys such nice looking stocks. I don't even know what to say. Ah, what a beauty. Does anybody remember getting when I splunked Matt? This is Splunk. Probably not in play anymore. It's probably been a takeover candidate or something. So just ignore this one. I splunked Matt. It's maybe a little overdone, Sean. A little too hot. I want to see stocks that are not pulling too far away from the 8-day EMA. Uh, VLTO. There are exceptions. There are exceptions, but generally speaking, I like to see stocks that are right at the 8-day EMA. TO. Been talking about this stock for several days now. Been talking about this stock for several days now. Beautiful stock. Stella. Moving a little bit up from the 8-day EMA, but not too much. This would be more preferred right here. Walmart. Walmart has been on fire. Also, cheaper store. Notice cheaper stores. Costco, Target, cheaper stores, not expensive stores. And it's at the high right now. It looks beautiful. CMI, industrial stock right there. AEO, another retailer. That's beautiful right there. And I will look at Hog. Hog was on my list yesterday, on my mental list yesterday. It looked like it had some good news come out. A little overdone in my opinion. But I like it. I mean, it's just a little overdone. It would have been better right here to get into it like right here yesterday. This is a little overdone. And also look at how it closed yesterday. So be careful. Be careful. Don't get hogged. And last one, GSK. GSK. I think I've done a really good job today of telling you exactly where I'm at and what the market is doing and why. So let me just say a couple of things before I take off. So here's a link for you guys. Join me in my do some update live trading days with the Pro Trader dashboard. Yeah, I will do in the future. I've been just really busy lately, but I will. Thank you, Adam. I appreciate it. Updated live trading days with the Pro Trader dashboard besides the old master class. I will. I will. Adobe has not been on my list, which means it hasn't been breaking out, but let's see how it's looking now. No, no, it's at the 200-day moving average. Looks like it's going to start bouncing up from here again. Now, folks, the next FOMC interest rate meeting is less than 3 weeks away. I am super bullish on my number one stock for March ahead of the meeting. And I believe that by taking advantage of a brand new active trading style, which has given us a 95% win rate, that you guys can really, really make a difference in your trading, like the 282 people that are here right now, right? Wouldn't that be fantastic? 282 people. So follow this link, check it out. I'll give you my top stock pick for March, how to leverage the system that I've developed, all the details below. Check it out. If you have a question that I did not answer, please feel free to reach out to me right here and I will answer it. No customer service questions. Cam and his and Chip and they all need a job. So please ask them customer service questions. Ask me trading questions. You guys have a great day. We're going to have some volatility today, without a doubt. Please be careful. Keep your eye on the Telegram channel. I will be updating the pit and the free channel with all the juicy details. I hope you guys have a great day, and I'll see you at noon as usual. Bye, everyone. Thank you. Bye, Andre. Thank you, guys.